My dad passed when I was little, but my mom would talk, and she made some comment about my dad had said you should never invest less than $1,000 in the market. It was so hard to go get a job because even a decent job, an annual salary, I would look at and just be like, that's for a year? If you're going to spend your life blaming the government and blaming corporate, like, it's going to get you stuck. My laziness was the best sales point because all I thought is, so wait, you could put money away and make money. If you pick great companies, the rest will fall into place. When I'm just ready to give up because it's going to zero and I've just decided this thing sucks, that's when I tend to dive into it. I don't know that I look for the needles in the haystack so much anymore. I look for the ones that I think are right in front of our face. If I own Johnson & Johnson or Coca-Cola or Pepsi or the others, sure, I'll miss out on the growth, but if my growth was big enough, that 3 to 6% dividend will pay bills and I won't worry about the ups and downs of the stock. One of the hardest things with investing is doing nothing. You know, if you're able to save and put away, there will be a time that you're really appreciative of that.
Investors, welcome back to another go-round of Masters of the Market. Now this week, I am amped to have on with me Adam Kahn, who is known as the Rational Investor on his very own YouTube channel, enjoys dividend investing as well as value investing, and here to share all about his journey is Adam himself. Now Adam, I want to first thank you for joining me on Masters of the Market, and most importantly, get to the first question to kick us off is what exactly is your story and how did you get to where you are today?
Oh boy, that's a deeper question than I was prepared for. Well, thanks for having me too, Ari. I like your channel a lot. Geez, I don't really. That's a much bigger question. My entire journey. I started really, really young. I watched a couple of the videos you did, and one of them even spurred my mind because he trades trading cards. And when I think back to when I was really young, I think baseball card collecting was probably my first market that I really paid attention to. And when I think back to the days when I was doing it, and my brother does the same thing, like I remember going to a baseball card show when Don Mattingly was the new rookie and whatever else. And I had one table where they were selling me the card for $1, and another table was buying them for like $2.50. So I would buy the cards, walk over to the other table, and I'm sitting there just making a market essentially until the guy followed me to see where I was going with his cards and sold them directly. And I go home and my brother, who does similar as me, kind of yelled at me like, well, Don Mattingly's awesome. Those are going to be worth $10 or $20 in the future. Why would you only make $1.50? So I guess it kind of began with baseball cards, but even, you know, I just remember I grew up in a family where we discussed finance, and my dad passed when I was little, but my mom would talk to us about it. And I remember being in a car driving somewhere when I was probably, I don't know, 10, 11, 12 years old. And she made some comment about my dad had said you should never invest less than $1,000 in the market. And at the time, like, I recognized that either that's a lot of money or not a lot of money, depending on how you're focusing on the dollars. And my laziness was the best sales point to it because all I thought is, so wait, you could put money away and make money. That would be a great job. You know, like, but not out of this like drive. So I would then hustle as hard as I could to make as much as I could, as young as I was, to try to put away so one day I wouldn't have to work, but out of like sheer laziness, not out of anything else.
What age, Adam, did you start actually investing? I'm curious.
When I was a sophomore in high school, my grandfather was kind enough, he gave all of his grandkids $10,000. So I was a sophomore in high school, probably 16 or 17 years old. And there were 4 kids in the family, and my mom was probably worried I'd go buy a motorcycle with it. So she took it from all of us. And I kind of said, Mom, can I have my money back? And she looked at me and she's like, well, why? What do you want to get with it? And I know I shocked her because I can still picture her reaction when I was like, well, I want to put it in stocks. And I've shared this story on my channel, actually. So cool about it. She's like, okay, well, write down the ones that you are interested in. And I can't remember one of them, but I wrote 5 stocks down on a piece of paper. And was Eastman Kodak, Chrysler, General Electric, the one I can't remember, and the other was McDonald's. And what I think is really cool about the story is Eastman Kodak is out of business, Chrysler's out of business. Since I don't remember the other one, I won't even include that. GE, I think, has reformatted. So what you see on the ticker today is not what I bought, and it would be worth very little of what I invested. And the $2,000 that I put in McDonald's, if I still had it, has split enough times that it would be close to $250,000.
Wow.
And it just show right now. It's been 40 years. That was a long time, but it really does show you if you leave it in great companies, which is kind of what I try to talk about, that even if you don't pick perfectly, things really do work out just fine. If I take that entire $10,000 over that time frame and don't even ignore that four of them are zero, it was still a decent investment. And McDonald's was already a company that there were stories about somebody's grandmother who had invested $1,000 and they were worth multimillionaires. This was not so early on that it was a small company. It was well established and no different than what I would think of as Amazon or Google or any of the others today. It was just one of those companies. So big and boring and still growing, did incredibly well going forward. So that was my first investment. When I graduated college, I didn't know what I wanted to do. And that's where I really got beyond lucky. My brother was out in Chicago. We grew up in New York, but he was working at the Chicago Mercantile Exchange. And I didn't really know what I wanted to do. And he's like, I think you need to come out here and see what this is. It's pretty amazing. And I mean, the minute I walked out there, I'm like, no, this is for me. I would probably still be doing it if computers hadn't come around. It just really changed the business. So I went out there. I got a job. I worked for a company called Lynn Waldock. I get to Chicago. I have the interview like the next day or the day after, and I'm interviewing with the guy, and he says something like, well, we normally start people at $5 an hour, but I see you have a college degree, so we'll start you at $5.50. So I feel like my college degree made me 50 cents an hour, which is pretty impressive for all those years. And then he's like, well, when can you start? And I'm like, I don't know, whenever. He goes, okay, let's get you a jacket. We'll get you set up and we'll show you around. You can start tomorrow. And from there, I just started weaseling my way to figuring out how to get in one of the pits and become a trader. Just kept pushing around. Eventually, I met somebody who hired me as an assistant to kind of, in time, he would get me to trade. And he was trading in the yen options pit and gave me some leeway to be able to, or he was in the Swiss franc. So he gave me some leeway to trade some of the futures with him, where he's like, if you see something and you want to put it on a trade, just let me know and we'll be happy to do it. I guess he and I were just different people, because what he really meant is if I had a long-term vision and I wanted to put on a trade, I'm welcome to do it. Well, I kind of started scalping the market and I was doing really well, and he fired me. And when he fired me, I was like, well, I was doing really well. So I went through the process. I borrowed 50 grand to be able to open an account and went in the yen pit and started trading. And I was beyond lucky. So it's very hard for me sometimes to suggest to people like the path for them other than saving, because I knew to save and put away. Those opportunities, like, you can't really go to the floor anymore. It doesn't exist. It's much different on the computer. It was a wonderful experience, but it also kind of hurt, because once I got out, it was very hard for me to normalize back in the society. So computers came around and people didn't see it changing the industry so quickly. It started out with a couple of guys with a handheld in the pit, and they would have one market. We're trading the same market. Like, they're trading the yen and I was in the yen pit. But if we were 2 bid at 4, their market might be like 1 bid at 6. Like, it was just wider. It wasn't as good a market. And you'd see the guys on the handheld and all the old timers like, I've been through stuff like this before. It's no big deal. Well, in time, their market started tightening up. And I would say within a year or two, there was almost no business in the pit anymore. When I left, it was so hard to go get a job because even a decent job, an annual salary, I would look at and just be like, that's for a year? Like I couldn't settle down into what a normal job would be. Now, fortunately, I had done exceptionally well and I had saved, and then I used that money to buy some properties and use those to do rentals and get them rented out. Even with the up and down, like the big market crash, I bought some other properties, and then when they went up, I was able to convert that into stocks, which I like better for a lot of reasons. My passion is real estate, but when I think of the headaches of tenants and I kind of joke with my brother, if I put it into Pfizer or something that I get a dividend, I don't think the CEO of Pfizer is going to call me up and let me know an air conditioner broke. So
Hopefully not.
no, right. Well, maybe I hope he does, because that would be pretty impressive that he even knows who I am, and maybe there's potential there. But right. I mean, just realistically, they're never going to bother me. And the prices have finally flipped to where the housing, when I look at what I could make in a rental versus what I could make in a dividend with no headache. While I still love real estate and my heart is there, the math doesn't really make sense to me.
I have an interesting question for you because it
Yeah,
sounds like just from the very get-go of your story, you've had this money mindset. You were saving from a young age,
always.
the baseball card. Adam, where do you think that inclination to be money focused or driven for, I want to say, success in this regard came from?
Boy, that's a great question, and honestly, I have no idea. Like, because I like immediately that's what I wanted to do with it, and I was annoyed that she took it from me because I saw a loss of an opportunity. But I know, so I don't have a great answer. It's interesting that my brother has a similar personality. Our sisters don't. I mean, don't get me wrong, they're, but I don't have a great answer.
Do you think it could be trained? Because like before we got on the call, or even while on, this chat right now, just talking about investing into like, say, a McDonald's, right? Or before you go to buy that Starbucks coffee, maybe become the investor into Starbucks, for example. So I want to ask you if you think this could be trained, this mentality could be trained, or are the masses doomed?
100%, I think it can be, and I really push that with my son. Like I talk to him all the time about it. And as opposed to a lot of others, like I love YouTube too. I watch a lot of it. I saw some guy who called himself a couch investor or whatever it was. Part of what I like about that original story and where I teach my son is A, taking control of your own finances, and B, not really overthinking it, because it's not like I did the analysis. Like I'll look at earnings and things like that as well, but I also think that there's a lot of bad information too, that if you pick great companies, the rest will fall into place. So you don't need to worry so much about valuation. Now, as I've gotten older, some of it I can't help with. It's very, like, I won't buy Costco, even though I think it's one of the, I'd put it on my list of top 5 and I really want to own it, but I can't stomach where it is. But to your original question, yeah, I think it can be learned. And I think as I watch my kid, because I use that for a lot of it, I think what they teach in school is a huge mistake, and they need to teach financial awareness and make this part of what they understand, because it isn't that hard. And what ends up happening is people never get taught. They get older and they're intimidated by the verbiage and the people who run the industry and everything else, when the reality is it could be really simplified, and the people in the industry have just been talking about it so they understand the language, but it can be made a lot easier where anybody can understand it. I mean, the basic simple thing is, don't run up your credit card debts. Don't, debt, especially as interest rates are going higher, is a killer. Like, you have to be really sensitive to it. Those types of things that are not that hard to understand, that with some self-control and everything else, of course, people can figure it out.
Let's talk about some of the steps to take before one gets invested. You already mentioned one of them, credit card debt and not having
Yeah.
credit card debt. What are some of the other steps, perhaps that you've even shared with your son, I guess, on a personal level here, and how to set up foundation before you get started?
Well, absolutely along the same plane or along the same means, however you phrase it, is financial awareness, which a lot of people use that term. And then what I tell him is living below your means. Like you have to think that way. And if you make X dollars, you have to spend less than that. And the more less than that you spend, the better off you are. And maybe that means a second job or roommates or whatever it is that you may or may not want to implement in your life. But, something I said to you before we even did this is your future self will thank you. If you're able to save and put away, like there will be a time that you're really appreciative of that because I don't care what you do. We all have ups and downs. We all lose a job, not from our own mistakes. We all, whatever it is, the markets go up and down. And if you don't have a cushion to deal with that when that happens, or whatever it is, or need to replace an air conditioner if you actually have a property, you just need to be prepared. And the first way to do that is having an active income to put away to build for a passive income. And it takes a long time. I mean, the McDonald's story, while it sounds great and we talk about it in 30 seconds or a minute or whatever it is, that was 40 years or 38 years. So you have to really stick with the discipline and stay living below your means, whatever is coming in, and you need to be able to adjust.
Let's tap into your portfolio, and I want to have you walk us through what it looks like present day. I guess we'll start with the total value from the get-go, and then we'll dive into the actual holdings within it.
I don't know my total value. I mean, I constantly try to figure it out, and on purpose, I separate into multiple accounts. I have a primary account that when I talk about it, I call it like my safe deposit box because I literally used to get the certificates and put it in the safe deposit box. I do that as a safety net for me. We all have our own flaws. You have to be introspective enough to know them. And the trading life has made me not as good an investor. So when you invest, you have to invest in that company and believe in that. The bulk of my money gets put into an account where the advisor knows I am not allowed to touch it. That his only primary purpose is if I call him and tell him I want to sell something, he tells me no, and that I will fire him if he does not. Now it's my brother, so we have a nice relationship. It's easy to do, but that really is in terms of equities because I do have some property, and then I'm paranoid. I mean, I have some gold and silver in a safe deposit box. I believe in some crypto too. And with everything I invest in, I don't worry if that one product goes to zero. I just want to make sure I'm spread out. And the bulk of my equities, which is probably 80% of it, are things I don't want to touch.
Sure.
I then have another 18%, and I'm making the numbers up. I don't know how much, but I have an account that's specifically geared toward high return dividend stocks that is in my possession, but they pay dividends and I don't really trade them. And then because of my background, I have a small account that I have that, it's like gambling. I trade and I'll buy and sell, whether it's intraday or daily or weekly, and I'll sell. Actually, I'll sell calls and I'll sell puts in my dividend account, but in the trading account, I'll be a little more aggressive with it. I'll have weekly options consistently and things like that. And to be fair, the reason I put 80% or 70% in the one I don't touch is that does the best. It just takes time and it's not as much fun. I mean, some people talk about, and I agree with, one of the hardest things with investing is doing nothing. Like you feel like you need to do something. The reality is you're really best off going and working a job or doing volunteer work if you're fortunate enough to be in a position that you don't need that or whatever it is, and letting your positions work if you've made good decisions on those positions. Outside of that, like I said, I can't help but have a trading account. I like the action of the ones that move too, so I will trade.
Sure. Let's talk about a little bit about that dividend account that you have. Now, I've actually
Sure.
actively seen some of your videos on YouTube about that
Yeah.
account. I believe right now you have 14 holdings in that dividend portfolio.
Boy, if you counted them, I believe you. Yeah. Yeah, I'd have to open it up and look. But I also, part of I take on more risk than I like. I try to be really sensitive. Part of why I say over and over again is, find the financial is I know I take more risk than I think most people should. I think 30 or 40% of that account is in one holding. And that's a terrible idea. I like the story, and when I picked it up, it was I get attracted to yield, and it was paying 15 or 16%. It wasn't 100% of the yield. It was that I like the story on the stock too. It's a subsidiary of Nextera Energy, which I really believe in. They have the Nextera Energy Partners that has contracts directly with Nextera Energy, and they had fallen naturally from about $80 a share to 50 or 40. And then an announcement came out that while interest rates were going up, they saw the path for the growth of the dividend, not the growth of the company, only being 5 to 8% growth in the dividend going forward, when they were essentially hoping for like 12 to 15%. Well, this drove the stock down to like $22 a share, and a 14 or 16% yield. And all I thought was, I can get a 14 to 16% yield growing at 5 to 8%, and this is bad news. So I bought way too much of it, but I did the math backwards of what I would want in a dividend each quarter as well, and really just dove in. And then I thought, geez, I have too much of it. So I actually reached out to the company and said, hey, is everything okay, or should I worry about the stock price? And I was shocked that they responded and set up a Zoom. And I talked to they don't have employees. The employees are actually Nextera Energy. But the guy made me feel comfortable that their contracts are in place through 2027. And at least their guidance there is very accurate. And that's when they work on renewing them with Nextera. And my guess is, depending on where interest rates are, it determines what those future ones are.
Can you talk to us a little bit about the makeup? What holdings are in there? Which ones do you think are in there?
Well, I know I have. I think it's called Virtus InfraCap something. It's a what's it called, preferred stock fund. And what I like about them is they pay monthly, and it's about a 10% yield. And that between that and Nextera Energy Partners, because I'm getting over 10%, that's probably 50-60% of the account. I know I bought Best Buy, which I don't see a ton of growth in, and I don't think it may be the greatest company. But similarly, it was a dividend account, so it's paying about 5-6% yield, which is great. I recently added Pfizer to it for the same reason. Other than, Pfizer, I just think they've been so out of favor. It gets 6.5% currently. What else is in there? I know I have. I bought some Archer Daniels Midland. I have that in the other account too, because they had a bit of a scandal, and a general premise that I try to stick with is great companies with bad news. The best investments I've made are the ones where the bad news is out. Like when everybody else is scared, if you give it a year or two, generally that subsides, and the companies know how to weather through it, and things go back to normal, and the fear ends, and they drift back up. So Archer Daniels Midland, but it has a very small dividend, so I didn't put too much in that account. I actually had picked up a bunch of Target when it had fallen, starting at 130 all the way down to like 105, because it was paying a 5% dividend, and it was having bad press about, they were having to close stores because of theft and everything else. And all I thought is, well, if they're closing non-profitable stores, doesn't that make them more profitable? So while the media is selling this as bad news, I saw it as great news. And I recently covered because it had moved up so significantly that I was like, well, how much was I really looking for in it? But I bought it for the dividend. And you probably know better than me what the other ones were in there.
I want to ask you if you could ballpark on a monthly basis how much money in terms of dividend income is coming in.
I would say probably 4,000 a month if it were monthly. I mean, it generally comes quarterly, other than the Virtus InfraCap one. But yeah, I mean, on Nextera alone, it's a little over 20,000 a year. So that there's probably about 2,000 from it. So yeah, just from that account, there's probably about 4,000 a month, I would say, on average coming in.
So there's this notion, I'm sure you're well aware of it, living off of dividends. And a lot of investors, or I'll say a lot of young investors, really aim for that. Now, what's interesting is when I hear your story, it's not this overnight success of all of a sudden you have $4,000 in dividend income coming in. Can you talk a
Yeah.
little bit about your process, how you discover the boring companies? And I think the bigger question is, how do you know which boring company to hold on to for the longer term is the winner?
Well, the ones that I put away forever, I don't know that I think of them as the boring. My process is, if you pick what are the best companies, however you define best, they'll outperform. I don't really believe in ETFs too much. And maybe I should, maybe I'm better off just buying the spider and the Qs and being done with it. But they encompass all the bad companies as well. And I don't want to mix those in. I know that I'm not, like, if Palantir ends up being the next big thing, I'm not going to be a part of it, but I'm okay with that. I'm much more comfortable. Like, all right, I'm going to get ahead to one of the questions you asked because I've thought about it nonstop, which is, if you have $10,000, what would you invest
I'll now have
100%
to
of it in?
change the
Yeah,
question at
you're
the
going to
end.
have to come up with something else for sure. But and I really struggle with that question because it depends what you mean. It depends at the time of your life and everything else. But if I were to put 100% of my money into one company, that company would be Amazon, because they were so well spread out that you've almost diversified by owning Amazon. Those are the companies I look at, and I don't buy 100 companies and put a few $1,000s in each. I try to pick 10 to 20 Amazons and put a big bulk of my money in. I listen to what Warren Buffett and Charlie Munger used to say about waiting for those great opportunities and making the bet. I, I don't have a problem putting a large percentage of my portfolio in an out, like, I missed it, but I should have done it with Archer Daniels Midland when the bad news was coming out. It's only $10 higher. I didn't miss it for a small amount. But when bad news comes out on a Meta, which we have today, but I think there could be room to the downside, this is one of those companies that I would put in the realm of, you know, top 6 to 10. And I really struggled. In one of the videos I talked about, so I had sold out of Apple. Uh, I agreed. I was listening to Dan Niles. I think they are overvalued for where they are. They haven't really been growing. The only thing that's been growing is the PE, and they haven't really come out with anything in ingenious in a long time. I mean, maybe the new headset is great, but it's so expensive that who's going to really buy it? And. But I would put them in my list. Like, how do you not have Amazon, Google, Apple, Microsoft, maybe Tesla and Costco, which I said I don't own, but these are the greatest companies. That's where I want my money. And if something changes fundamentally where there are new ones that fit in that, and Starbucks is in there for me too, since we talked about that. But if something changes fundamentally in those companies where I don't see them as one of the great, then I'll reconsider. Otherwise, I'll go back to McDonald's. During those 40 years, it fell in half or more 3 or 4 times. So I don't care. If Amazon falls from what's it, like 170 or something now, to $80, if I'm in the position, that's a reason to buy more. It's stressful because I put a big percentage of my funds in it, but kind of like Meta today, which is my largest holding. Well, if it gets down to 300 or 350, as much as my stomach's going to be churning, I want more money in Meta, unless, I question how much he's going to spend on the metaverse, but I'll bet on Mark Zuckerberg. Like, and then I don't spread too thin. In terms of the big and boring, they're really easy to find. The what are they called? The dividend kings or whatever they are. And as I get older, I will shift into those so that I have the dividend checks coming in and I don't worry about a company like Meta falling from 500 to 250 potentially, which I hope and don't think will happen. So I don't want it to hurt the wrong way, but I know that's a possibility. If I own Johnson and Johnson or Coca-Cola or Pepsi or the others, sure, I'll miss out on the growth, but if my growth was big enough, that 3 to 6% dividend will pay bills, and I won't worry about the ups and downs of the stock.
Now, investors, we could talk all day long about investment strategies, hot stocks, and how exactly to become a master of the market. But arguably, one of the most important aspects of investing, hands down, comes down to the very research tools that you're using. So I wanted to go ahead and take a moment to now mention today's sponsor, Visual Sectors, the platform that is giving investors a more precise overview of the entire market. Now, let's just say you think of investing into a stock. You can type in the ticker symbol or the company name on Visual Sectors site, and from there you're going to have an overview of all of the recent trades that have taken place in real time, so you can compare your investment strategy with what other traders are doing. You can even look into the price levels, which is what most professional traders look into, or you can discover the dynamics of the flows for a better overall understanding of the stock's actual performance. You see, Visual Sectors wanted to give retail investors like you and I the ability to get the same data as the bigger institutional investors. And if you're not exactly an expert in trading, like me, well, you're going to get a step-by-step guide that will ultimately help you understand how to use all of the trading tools like a pro. Moreover, the Visual Sectors team has been working closely with Wall Street experts to give you the latest stock analysis, while their research team just continues to develop new resources. So feel free to check out Visual Sectors using the link in the description for a 7-day free trial. And if you decide to sign up, there's also a nice 40% discount for you for the first 2 months. Nothing to really lose, all to gain to become a master of the market. Now, with that, we're going to get back to our chat. You shared, when you just spoke, that you believe in Mark Zuckerberg, and I want to reach a little bit deeper into that notion, because I feel as an investor, we must come to understand not only what we're investing into, but who we're investing into. How much of a role do you think, as an investor, understanding management actually plays when it comes to picking stocks?
Oh, I think it's huge. I mean, I'll use a failure of mine as one of them, which is like Mary Diller. I don't know if you're familiar with her. She took Ulta Beauty and like 20 or 30x did over a certain amount of time. She reached out to Foot Locker because she wanted to work for them. I don't know what she sees in them. I bought it terribly. I've gotten out of it because I've given up on her, but I still do believe in her. I think I've given up and just moved on. But I think Mark Zuckerberg or the people you invest in, they create this. They go on to do great things. Look at Disney when he's come back, and look at these, like, immediately people know that they know how to run the business. So yeah, Mark Zuckerberg, Jeff Bezos, these guys are the best at what they do. And similar, I want, even the baseball cards made me rethink about the stocks and investing. Don't I just want to invest in Michael Jordan and Wayne Gretzky? And I did the research to learn that the Pokemon Charizard, like, why worry about all the peripheral stuff?
Sure.
And then I thought that with, geez, well, why am I doing that with the stocks? Why am I worrying about the other ones? I just want to own Michael Jordan, and I want to put, like, I know Michael Jordan is not going to fail, and I don't mean like he doesn't even play anymore, but the depth of how many people know who he is, and it's worldwide, and I have full faith that over time that will continue to go higher. Well, I feel the same way about stocks. Why worry about Patrick Ewing, who I love but never won, and who else really cares about him? Forgive me, Patrick, if you're watching. But you know what I mean? Like, really, like, focus on the best and don't worry about the others. Now, the nice thing about stocks is there's a zillion of them that all fit what you need out of your life. which is why I also say, despite me wanting the Michael Jordan, in time, I really will shift to Reggie Williams or somebody else that pays a dividend, and he's just going to put up points day in and day out. He's not going to be the superstar, but he'll be consistent. He'll never fail. You know, I don't, everybody else loves it. I don't love Coca-Cola because I don't see a potential for growth. But if I want a dividend check, I think they'll be selling beverages for a long time. And they've got, what is it, the number one logo in the world. So I'm comfortable that it'll work for what I need at the time I need it.
I love the approach. I'm curious to know from your standpoint, once you go through and you comb the market, you have your handful of the needles in the haystack, if you will, what is your next step? So let's say you've generated your list, your watch list. What's the next step of metrics that you're looking at, or the kind of need tos or step-by-step approach that you take to actually narrow in on the buy?
I just trust myself with them, and I that's why I don't know that I look for the needles in the haystack so much anymore. I look for the ones that I think are right in front of our face. I think I'm better off, and I will miss out on the next Tesla, or the next what Apple was in the 90s or early 2000s. I know I probably won't own those companies. If I were earlier on in my career, I would be looking for those and being in Shopify and Snowflake and so on and Palantir and the others. I just know that they can fail too, and I don't want that type of risk. I don't readjust as they go higher. I want to give it the bit, like if Meta goes to 50,000 a share, to over exaggerate. I don't want to ruin my chance of making 10-20 million dollars or some absurd number. So if it becomes quote unquote too big a position in my portfolio, great. Like that doesn't bother me and I'm not going to stress about it. Now, I know from the conversation before we got on, I do pay attention and I do stress. Meta's my largest position and today hurts. Like I don't like it, but I slept just fine last night and I'll sleep just fine tonight. And I hope it goes to 1,000 or 2,000 and becomes even a bigger percentage of the portfolio. To my friends have already made comments of why wouldn't you sell a little off? And I think because what if he turns it into what I bought it for? Like there is no point for me to constantly be whittling it down so the percentage makes sense to the portfolio side. Now, if it became 50% of my net wealth and it was just silly to have that much in any one product, maybe I would make an adjustment. But maybe that would be a big enough number that I wouldn't worry if it fell in half because the big number. What's the difference?
Adam, you named a lot of non-dividend paying stocks when you shared if you were a younger investor. So I'm curious to get your take on, if you were a younger investor today, what would your portfolio look like? And would you recommend a younger investor starts with an ETF, dividend stocks, goes all growth?
So he's 13. I have taken much more risk in terms of his account, but I do include dividend stocks. And I do that so that he can get his own allowance. Now, I haven't been great at following through, but when I talked him through, I bought a couple of stocks and explained to him that you'll get a dividend. That's your money. You can use it for whether it's video games or going with your friends or whatever you want, to teach him about dividends and that companies share in their profits and things like that. But then, I have him in Spotify, which I don't own for myself, and he picked it. His friends use it. And my thought is if your friends are using that, well, great. I can't help it. I put them in Amazon and Google because I think they're just great companies. And I think he has a couple shares of Meta as well. But he also has Snap because his friends use Snapchat. I don't love the company, but I stuck with if your friends are using it when they're 20 something, they're probably still going to use it. But he has Shopify and Snowflake, which is where those kind of came from as well. If somebody's in their 20s or 30s, I think ETFs are like, if you work a job and this is not what you do and you don't love it the way that I'm sure you do, and the way I do, because this is what I want to do. I don't ever think about retiring. I think about getting older and investing. Like I like this stuff. But if it's not what you like, yeah, absolutely. There's some great ETFs that have really small charges and fees. When we were younger, the mutual funds they're charging a couple percent. It's too much to justify. But like the ones I think I mentioned earlier, if you just buy the spiders and the Qs, you've now just bought the S&P 500 and the Nasdaq stocks, and then you really don't need to worry about it. Schwab, I know you talked about, has that wonderful one, SCHD, that'll pay a dividend. And I think VOO and some of the others. I think these are all great avenues for people who work jobs and really just don't want to think about it, because legitimately you could pick two or three ETFs and put all of your money in it and be pretty well diversified to not stress about, do I worry about this one or that one? I like picking the companies. I feel like I own those companies. It's so silly, but I take a pride in picking them. And then my ego, I think I can outperform the market. Now, sometimes I do, sometimes I don't. That's just an ego thing, but maybe better off in the spiders and the cubes.
Let's talk about some of the failures. What
Yeah.
have been some of your biggest failures as an investor over the last few decades that you wish you could have either changed or you really learned from?
Well, my biggest failure was one trade in the pit. Um, I'll share. I lost six figures one day. I was short the market. Now, at the exchange, you tend to do what you're always telling people not to do. You average into losers. You take on bigger risk. Like, you just do. It's actually how you make money. So no, that's why I say don't follow what I do. You guys need to make your own decision. But I was short the yen, and we went through some level, and it triggered some very large stop orders, and I sold a whole bunch more. And so the advantage of the floor, people, like, what I try to explain is, who's who, and those like kind of direct the market. The banks know where the market is because they have a headset directly with New York, and we trade off of where New York is. And we were trading at the equivalent. I'll use stock terms because it gets a little confusing, but let's say it's $30 a share. And I look up at the desk and I see the Smith Barney clerk go, I'm 70 bid, I'm 70 bid. And I'm just so screwed. Like, and I just kind of head down. I eventually get out of the position. I don't even really add up what I'm down. I just know it's a bad day. And I'm going home, and I like the story because it turns the failure into a net positive. And this really happened. I'm walking out to go to my car, and I see a homeless guy on the street begging for money, and I'm feeling really down. And I think, well, I'm going to go home. I'm going to have dinner. I'm going to go to sleep, and I'm going to wake up tomorrow and go to work. I give the guy $100 and went on my way, and just thought, life goes on no matter how bad you think it is. And you have to constantly focus on what's really important. Like, because really I was really down and bummed and everything else. So as soon as I saw that guy, it was just like this click. And I went on to have a really, not, the month was not really good, but I made back almost all of it in, I don't know, month and a half, because it just got my head back in the right place. My other biggest failure is my brother and I bought a seat at the exchange together. And I don't have a great analogy for this because I won't say the numbers completely. Well, I think we bought it near the lows when it fell from like $1 million to 200 and some odd thousand. And I was trading at the exchange, and the real value of owning a seat is you would change your commission structure from like $1 a trade to like 5 cents a trade. And I was trading enough volume that at 200 and some odd thousand, I would make that up in like a year or less. You're in and out all day long, trading as many shares as you can. That's a huge savings. When I left the exchange, you could, similar to owning a property or anything else, you can rent those out to other traders. Well, the rent fell from like 4,000 to 2,000. I had a feeling, kind of like I say, bad news with good things, like this was a great opportunity. And since I left and the rent fell, I justified that to say, let's get out of it, and sold it for like 350,000 as they went to 7 million. And I sit there and think that was a life changing mistake. Now, similar, I try to justify it like maybe I ended up a crackhead and dead on the street because I made too much money too young or something else. But I really do kick myself for the seat. Like I could have just rented it out and kept it. And they ended up changing it to where you got shares of the CME when they morphed into the future, and it wasn't just a seat. And if you're Morgan Stanley or the others, you had to own a certain amount of, you needed two what are called CMEs, two IMMs, two IOMs to actually be able to have an official seat at the exchange. So they became really valuable.
In both of those stories, one of the takeaways that immediately came to me was the fact that you had a pretty rapid bounce back into life, if you will.
You have to bounce back. You can't, and in life, like you can't mull on the negative. It's it's gonna hurt you too much. You and I were talking about it before the call. When I watch the gloom and doomer videos and I see the comments, it upsets me, and I chime in sometime. But it upsets me because I think if you're going to spend your life blaming the government and blaming corporate, like it's going to get you stuck in that rut. Like it's very hard to get your mindset out of that. You can't let yourself focus on the negative. I think about the seat, but I really do laugh it off because it would be too easy to blame the world and life on that screw up, right?
I'm curious to get your take on how to handle fear, because whether it's a mistake that was made, and obviously following a mistake, a bunch of fear comes with that. And an investor, maybe newer, even more experienced, would say, oh, I'm done because I made that mistake. I should hands off at this point.
Well, I'll use advice that somebody gave my brother. If you're worried about fear, you probably have too big a position on. If you still like the position, double up. That'll clear the fear away real quick because you'll get out of half and all of a sudden you'll feel comfortable with your trade. Now, that being said, maybe I should have a little more fear sometimes than I do. I'm fortunate enough that even when I was younger and worried what people thought, I never really worried too much about that. And I think that's a big help in terms of your questions about fear. Because even when you start trading, one of the toughest things is getting over that anxiety of how does that look? Like you look like an idiot. Your hands are, you're yelling, you're this, you're that. And a lot of people overthink that stuff. And it's just like anything else. I was an athlete as a kid. You just do it and you take the risk and you don't worry about what people think in terms of how you look. In terms of fear of risk of a trade, like once the trade's on, you don't have control. There's nothing you can do to halt, like the markets go where the markets go. So make sure to keep it small enough that if you lose your money, that's okay. Make sure there's a backup plan. The fear is just fear. Fear does nobody any good. Getting angry doesn't do any good. All of those things just have negative consequences. It's very hard when you believe in Starbucks and you buy it at 110 and it drops to 105, and you buy it at 105 and it drops to 100. So you buy it thinking what's going on, and you buy more at 90 and now it's trading 87. And of course you start thinking, did I miss something? Is it just going to zero? Buy little enough that if it goes to zero, your life goes on and it's okay. And even when you start buying, know that it's probably going to go against you. So put in a percentage that's appropriate so that you can add on. And as much as I said on the floor, we all did the wrong things. If I think I'm ready to buy a stock, I probably only buy 5 or 10% of what I really want to buy. And I almost hope it goes against me. Then when it gets to where I'm like, I want to sell it all because it's just going lower, that's when I buy like 130% of what I really wanted to buy. When I'm just ready to give up because it's going to zero and I've just decided this thing sucks, that's when I tend to dive into it. And sometimes that's a big mistake because it does suck and it just goes to zero. I mean, I own Peloton from $140 a share at this point, or 110 or something. And I think it's trading at 3. But I got caught up in the exuberance when everybody was too. And I've kind of written it off that I think it's going to zero.
Can I ask you what you think the biggest mistakes the masses of investors are making?
Not investing. I mean, there's only one mistake. Otherwise, sure, you might buy something that goes down. And then I always suggest invest in what you know. It doesn't have to be stocks. You know, if you know wine, which I know nothing about, or art, by all means, everything is an investment. I wish I knew more about the iPhone. I think the original iPhone is a huge collectible. But don't invest in what you don't know is another lesson I've learned, because I also know if I went to find it, I would overpay for the wrong one. And even if I was right, would be so far behind because I just got ripped off because I don't really know what I'm looking for, that I would need the market to go way too far to do half as good as what I would have hoped. So stick with what you know. Otherwise, the things you asked about, those ETFs kind of cover for that. Like if you don't know stocks and you really just, you're a nurse or a doctor or whatever, and it's not something that's your specialty, this fixes that. And it gives you an opportunity to invest in things, that kind of spread you out. And if you are a doctor and you're watching, you tend to be the worst investors. So this is a really good way to mitigate that.
Now, when it comes
Yeah.
to your portfolio, I mean, the most recent one that I watched, at least that you showcased on your channel, the 14 holding portfolio that you have,
Yeah.
dividends. I'll easily always talk about one of my biggest mistakes as a dividend investor, or just an investor as in general, was actually made during 2020. I got really excited. A lot of great companies came down, to unbelievable, like once in a lifetime share prices. And I went in on all of them. Now, something that you've highlighted multiple times on this chat has been, focus really on the ones that you truly believe in, the ones that you truly feel are the winners. So here you are with this portfolio of 14 holdings. There's a lot of investors out there who have portfolios of, 50 plus, 60 plus, 100 plus, which at some point it's like, why not just go with an ETF and forget about it? But what would you say to those investors who are loading up on 50, 60, 70 plus holdings?
You can't know those companies. And you're like, I still think if you buy great companies and you know that those 50 are a great company, okay. But the other problem is if you actually need to raise revenue, how do you know what to sell? There's too many choices, and you can't say just sell 10%. Now, I get really sensitive. I don't want to give other people advice because maybe it works for them. But my brother is a financial advisor, and we talk about that because he's got clients similarly. Like sometimes they'll put really silly percentages into something because they're not comfortable with a dollar amount or anything else. And again, I'll use Amazon. I'm so much more comfortable with Amazon that if it falls in half, it's okay. I'll stick with the company. If you don't believe that way with the 100 stocks you're buying, spreading out just for the sake of spreading out is kind of silly to me. Now, if you've got $50 million and you're spreading out to build your own ETF because you don't want to pay the 0.03%, I guess that's okay too. But I'm sure that's not the position. What I find is people buy one share of this, 2 shares of that, and they don't know any of the companies. They don't really believe in any of them. They're probably listening to somebody else who said something about a company and going in on that. And I don't see the value. And it's funny, even when you say my dividend account has 14 positions, in some ways it's too many also, because it's not a huge percentage of my portfolio. And my mistake in that account is I've totally gotten over attracted to yield. I really think you're much better off with the Starbucks that pay a 3% yield but have room to grow than buying PFFA, which is the Virtus Infracap one, simply because it pays 10% monthly. Odds are, or Starwood, that's one of the other ones I have. But if they're paying 10%, dividends are not free money. You know, the way I taught four of my son's friends, we did a finance class because the parents thought it would be really nice, and they all understood it. If you have an $100 stock that gives you a $10 dividend, you now own a $90 stock with $10 of cash. It was not free money. So when a stock pays a high dividend, that's just going to come out of the value of the stock. And for them to maintain their value, they have to be earning over 10%, which is not so simple. And just because they give 10% is no guarantee they'll be able to continue to do that. So you have to be really careful, especially new dividend investors, about being over attracted to the yield. Because of course we all, I'll get 10% return if I buy this one. Well, sure, but they actually have to produce to be able to pay you that eternally.
I always like to joke that every dividend investor has an Achilles healed. The
Yeah,
fact that it's like, wow,
I
you're
like that.
you're chasing the yield and there's
Yeah,
danger behind that. Not only that, they could be cut, which leads me to a question about
yeah,
dividend growth investing. Now, I always see this comment come through because now I myself, right, I have a longer term timeline in the market, and I too like the dividend growth players. Take Visa as a pretty solid example. I think
yeah,
that dividend yield right now is at 0.72%. And I'll make a remark about Visa and immediately get a comment.
yeah.
Well, why would you invest in Visa such a low yield?
I love I'm super excited that Meta offered one. And same thing, I think it's point 0.5. And I'm guessing if I bought Meta as a dividend play, similar to probably the comments you get about Visa, people probably think I'm an idiot. Well, no. Think of how fast they may be able to raise that dividend, which is way more important than what they're paying today. You know, Visa might be able to 10x that dividend or 20 or 30. And since it's such a small percentage of their actual income, similar with Meta, you know, I figure that could grow immensely over time. And the fact that they've implemented one tells them they like the concept of dividends and they plan to continue to grow it. You know, my real underlying hope with Meta is in time, instead of 50 cents, they're paying $10, $12. I mean, they make enough to pay it out, but they want to continue to grow as a company and they see that path. So they need the money today.
Sure.
Visa does too. I mean, I think Visa just started investing in the Solana network, which I found really fascinating. It should be able to cut their costs of moving money dramatically, but it also tells me there's some real value in the crypto space too, that they're way smarter than I am. Like I'm smart enough to know I'm not the smartest guy in the room, if that makes sense. And the people working for Visa understand their business and see an avenue to growing more profits by spending today. That puts them in the position to continue to raise that dividend, and they don't want to give away the money because they need it. And if I want to invest in Visa, I have to trust that they know how to invest that money better than I do. And at the same time, they might be able to increase that dividend at 20, 30%, which is way more valuable than getting a dividend of 3 or 4% that's going to grow at zero going forward and underpace inflation. Like Visa could be in the position to just crush it, even though today it looks like, well, what's the point of that? Well, the point is the future growth of that. It's not today's value.
What are your thoughts on monthly versus quarterly dividend payers?
It makes no difference. I mean, I only like the stuff that even I like. I like the monthly, but it's for stupid reasons. It's just because I live my life monthly. But same thing, it really makes no difference to what their profits are if they're able to continue doing it. If you're getting into retirement and getting a 5% return every month makes sense and you can put into realty income or something, I get it. If you're 18 and starting out, I think it's probably one of the dumbest investments because how's it possibly grow? They're already too big and boring and paying out most of their income in a dividend.
Adam, if you had to start your investment journey from the get-go once again, what move or moves would you make differently to be in a better financial position today?
Boy, that's really tough because it's hard for me to see the opportunities today the way that I did when I was a kid. I would start with the same premise. I always try to look for value. I try to think, and when I say value, I try to look for undervalue. I try to look for what I think is cheap, that's a bargain for some reason right now. You know, a property that's dilapidated in a great neighborhood that nobody wants. What I struggle with is, I'll use real estate. I think it's going higher, but I don't understand why, because I still agree with it's very expensive and the rates are very high. So it would be hard for me to find those things. Like maybe I'd go to Pittsburgh or Cleveland or areas where you're getting the rental returns, but I think you're giving up the appreciation. I felt like it was easier then to find deals because I think the algorithms today with the computers are too smart. But maybe that's just that I'm getting old and I don't have the same vision I had when I was a kid to take risks. I mean, my God, I would never trade on the floor today. I had no idea the amount of risk I was taking. I mean, and thank God because that gave me the ability to be profitable. But so to give you an idea, you understand, like for buying stocks, you can margin, 50%, right? Well, to trade currencies at the exchange, you get to wield $125,000 worth of a currency if you put up $2,500, and you don't get charged margin. All it is essentially showing proof of if I lose money, I have some money to pay. What you don't realize is you could lose 10 grand on your $2,500 you put up. And that's just to trade one contract. And when I tell the story of what I lost, I mean, I had 100 and so, like, I was lucky to lose what I lost. And I just had, like, I was stupid. I had no idea. And if I wasn't so dumb, I wouldn't have been able to do that. I think there's some advantage when you're younger about seeing opportunity and taking those risks because you don't worry about all the things you start to worry about when you're older. So it's super hard for me to answer. I mean, even like I said, I thought about your $10,000 question so much. If I were doing it for my son, I'd probably buy Bitcoin. Not because I'm saying it is the next big thing, but because at my stage in my life, I can see that as a small enough investment that if it's worthless, he'll be fine. He's young enough that who cares? And hey, if all the people are right and it goes to a couple million a coin or whatever, whatever their fantasy is, maybe he's hit the jackpot. But you could also go down to the strip and throw it in the slot machine too. Like, I don't know the best advice and the best route, which is why for me the best advice is save and save as much as you can. I like the ones they talk about to show you how cheap I am, despite that I'm in a decent position. I don't go to Starbucks. I own the stock. I love Nespresso, the one you buy at home. I like it way better than the Keurigs. Well, the Nespresso pods are like $1.50 or $2. I'm so cheap. I rip off the tops. I take out the coffee. I wash them. I buy the coffee I like. I grind it because I don't even want to buy pre-ground coffee. I fill it and I cover it with these stickers I buy on Amazon, another company I have the stock. And then I use those. Why? Because I think I spend 25, 30 cents per coffee. And then I can drink 4 or 5 of them a day because I like coffee. And I don't worry that it's $5 or $6 that the store.
So the real life hacks.
Yeah, yeah. But my brain is so stupidly analytical. I sit there thinking about, well, how much time am I spending it? And if I paid myself this much per hour, what is the coffee really? Now, I got plenty of time to do it, so I don't know why my brain does that. But really, the point is, when you're going out and you're buying food and blaming the world that things are too expensive, there are ways to save. And if you save and put away, that's what matters. I mean, it's been proven time and time again. You know, when I was a kid, they had monkeys pick stocks from the newspaper. Half the time, the monkeys beat the S&P. You know, like,
Sure.
it's hard to know what pays off, what doesn't. What pays off is the putting the money away to work. And unfortunately, leaving it in cash is a guarantee to underperform inflation. So, yeah, have a safety net, have some in an account if you lose a job or whatever else. But if you want the money to grow, you have to take some risk and put it in things that could grow. And my ultimate thought is a company like McDonald's, they've already weathered a storm. Like, they've been through it before. They've been through the .com. They've been through the financial crisis. They've been through so many things, whether it's inflation, whether it's interest rates going higher. Despite all the YouTubes talking about a Big Mac meal for $18 or whatever could be hurting them with minimum wages and everything else, I still have faith that Pepsi, McDonald's, Coke, Johnson and Johnson, like, that they'll weather the storm, and in 10 or 20 years, if you just leave it, they'll be bigger. I won't guarantee that they'll be way bigger and you'll be a gazillionaire, but I have faith that they know how to work through whatever gets thrown at them.
Macro wise, as we look at our current landscape, I mean, we just had a
Yeah,
GDP report come out
yeah,
a
not so
week back,
great.
inflation hot. How much of macros play a role in your investment strategy? Do you care about them? Should we all care about them? Do they matter?
Do I care about them? Yes, and they make me extremely hyperbolic. As as the doom and gloom videos scare me to death, and I lose sleep about some of it. But I don't change my investment because of it. Uh, I, to the point that I just said. Excuse me while I shift. The most important thing is investing and putting away. To the things you're talking about, yeah, I'm scared to death right now. The inflation is a problem. People are struggling. The prices of everything. I mean, I went to lunch the other day with a friend. We got two chicken sandwiches and split something. It was 60 some odd dollars. So I don't know how people do it. The numbers are showing that it is stickier than the Fed would have hoped. I do mortgages, and when I tell you we've slowed, we've slowed. I mean, anybody who's saying they're busy and whatever else, I think they're saving face. I do a good business. I'm pretty consistent. I'm director of loan operations, so I'm in charge of the other loan officers. And you know, my real goal is to retire. It's just my friend owns the company, and he's constantly pushing me to be more a part of it. But I see the volume of the company. I see what's going on, and I have a good lens. I think people like to say they're busy because they think it looks bad to be straightforward. Like I said, I don't things don't bother me the same way, and I also think that's going to be for a long time. I don't, even if the Fed cuts rates, I don't know that that's just going to stimulate all of these things. The cost of ownership has gotten very tough, but there's still plenty of people who can afford it, and there is a lack of inventory. So there is still a market, but things have slowed. I think our industry has made us hit harder than most, because I have friends who do, you know, property management and all other things, and they're still so busy they can't keep up, which is part of my concern to what you said. Like, I think it's stickier. I think that the inflation could continue to go. And one of the things I've said is, it reminds me more of what life was like when I was a kid. You know, I'll personalize it because that's what I tend to do with most things. When I was really little, I can remember a Snickers bar, which is bigger than they are today, and they cost about 15 cents. They then went to a quarter. They then went to 35 cents. and then they somewhat quickly went to 50 cents, probably over a 8 or 10 year time frame. They just generally went up a little bit every year. Then it stopped. Pricing didn't change for 20 years. So a lot of the people who get upset about the inflation we have today may be young enough that they don't really realize that's what life was. Things tend to go up a little bit year in and year out. And prior to COVID, I think about the stuff at Target or whatever else that was on sale for 99 cents a piece that they couldn't give away, that now you can't even find if you want it. And when you find it, it's like $8.99. You're sitting there scratching your head going, why? Right? I mean, why? Like, it doesn't even make sense. But the companies are now able to make a profit, which is appropriate, because I'm guessing when they were trying to get rid of it at 99 cents, they were really just trying to get rid of it. And B, inflation is natural. It sucks. I don't like it. You have to get less things. Nobody enjoys it. But the Fed's goal is not deflation. And if they do what they're hoping, that means prices continuing higher from where they are. That also means housing goes higher and equities. And two of the best things for inflation is real estate and stocks. So yes, it scares me to death. But I think markets climb a wall of worry. And until I get into an Uber and the driver starts talking about his stock portfolio, I don't think we've gotten to the point that it's gone too far. I don't understand it, but I can tell you at the last bubble, every doorman, every dealer at the casino, every taxi driver, because we didn't have Uber, everywhere you went, they talked about some .com. Till everybody talks about it, you and I talk about it because we love it. It's what we do. So yeah, it scares me because I'm watching it all the time. Is it going to make me change my trading or my positions? No, but if I'm getting into Ubers or if I'm walking into hotels and the girl at registration is telling me about some internet stock or something, yeah, I'll make a change at that point.
Adam, I have
But
one more question for you. And based on what you shared
okay,
just now on the inflation rundown and where I think economically we're heading, I want to ask you, if you were to lose it all today, I mean, every penny, every dime, what exactly would be your next move, given you are just about at retirement? So you
uh,
instead of
Ari, I'm
instead
gonna
of
have a
getting the
heart
ten
attack
thousand
right
dollar
here
question,
this one's way worse. I'm just gonna keel over. Um,
this may be a lesson learned on your don't jump the gun, right?
yeah, that was a big mistake. Can we do the other question? Um, I, I get a job, and I mean, what else do you do? I have a wife who I love dearly and a son who I feel like I couldn't be luckier. Like, what do you do? And the thing is, unfortunately, because of my background, part of what I'm not well qualified for a lot of things. So it would not be, it would be a waiter's job. Like I would need to find something that pays bills. And since I live in Vegas, the reason I say waiter or something is maybe I could get something that paid legitimately to help get caught up. But what's your other option? Just fall over and give up? Like, I would push forward. I mean, really, what drives me at this point is my family. If it were just me, I think there's plenty that I could just retire and be fine. But I want to try to make sure that if I got hit by a bus tomorrow, which is similar but different to your question, that they're in the position that they're okay too. Um, but if I lost everything, yeah, what choice would I have? I mean, I might look for something in the financial field other than what I do currently because we really have slowed, or maybe I would use that skill to get a job at one of the banks where I have to wear a suit and tie and go in day to day. It would be a really tough transition
Sure.
because part of why I tell people to save is I'm in that really fortunate spot where I can do what I want. I don't want to say it overly because, but if I wanted to go for a walk today and not do anything else, it's okay. And my videos are not consistent because of that. Yesterday was a wonder, yeah, I'll get to give him a shout out. My son got student of the month at his school. Now, I know that doesn't sound like much, but he used to go to Adelson campus here in Vegas, which is a great private school, and he got into one of their magnet programs for the public school, which is a really difficult program. It's all honors this and AP that, and he's only in seventh grade, and I can't believe the subjects he's taken, and I'm beyond proud. So winning student of the month in a school that's competitive. So I got to go to the school and have lunch where they celebrated it and be with my wife and those things. And I really think it's only because I put myself in the position of saving all my life that now I'm able to do things that most people can't just take the day and go and do that. And it was really special for me to be able to be there for that. Now, he probably could care less. If I wasn't there, he would have been just fine. But out of my selfishness, since I've saved like an idiot every penny for 30, 40, 50 years and invested it, the joy I get is the freedom to spend that time. I know, you and I talked about, you asked me how many vacations I go in. You know, I don't always go on a lot, but similar, I really make it a point. I try to take like a 6-week trip in the summer for that time. Uh, it's selfish. It's for me. It's so that I get to be with them and go explore things and see the world and whatever else. And I don't know that we'll get to do that.
Do you think you would nickel and dime your way back into the market at all if you had lost it all and tried to build it back?
Oh, 100%. I think I would try to find a job as a trader. What's tough is even the mutual funds and stuff, and it's kind of why I didn't transition into it after being on the floor. They're more computer based in terms of the way that they trade, and my skill set didn't fit. But 100%, I think it's a strength that I have, and I think I would just start over and look to whether it's a mutual fund or a bank or something where maybe I could help in their currency division or any aspect. I love markets, so I don't see why I wouldn't.
Investors, I want to have you join me in thanking Adam for joining us on Masters of the Market. I too want to give your son a shout out for hitting Student of the Month. That is an awesome, awesome award. And with that said, investors, you have to jump over to Adam's channel. It will be pinned in my comment down below. Go check it out. There's a lot of insights, just a lot of wisdom coming from Adam's channel. So investors, until next time, we will catch you in the next one.